Welcome back, and joining us for a look at what moved markets today is Jacobus Brink from SFO Investments. Thank you so much for your time, Jacobus. The US markets not too chuffed today, as we are seeing a sea of red over there. JSE slightly in the green, European markets mixed. It seems that there isn't any one thing holding the markets up or down. What do you make of this sentiment, and also what investors are chewing on right now?
No, Azanoti, thanks so much for having me. Always a pleasure. Yeah, no, I think anyone that was expecting a slow week because of the holiday shortened Easter weekend, we have had a little bit of a rude awakening today. It seems like the chip war between the US and China is heating up quite substantially. We got some news out of China this morning that Beijing is now, I wouldn't say forcing, but forcing might be the thing that's happening. Some of the government institutions do not use any of the US manufactured chips, software, etc. So pretty much pushing back against what the US has been doing for the last number of months. And I think that's to a large extent what's weighing on the markets. In the US is more, Intel, Microsoft, AMD, all of those are, real big consumers, or a lot of their earnings come from China, so that's putting pressure on the markets. And then in addition to that, there's quite a lot of action going on in the commodity markets as well, driven by oil mostly. We saw the UN had another round of votes this morning on a possible ceasefire. That doesn't seem to be going well. And in addition to that, over the weekend we had some more attacks by the Ukraine on a few Russian oil facilities, so that's also putting pressure on the oil price. So lots to digest, but we can go into a bit of more detail as we carry on.
Yeah, indeed. And markets also still digesting comments that came out of Fed Chair Jerome Powell last week. But of course, we also know that locally we do have the South African Reserve Bank coming out with its interest rate decision on Wednesday. Of course, expectation is for a hold. Is there any kind of shift or change in language that you are expecting from the SARB on Wednesday?
Yeah, I think that if you start with sort of the language we got from Chairman Jerome Powell on Wednesday last week in the US, he pretty much confirmed that, they are still on track to cut rates 3 times this year, starting in June. So the market, I suppose, believes him to a large extent, but it's still only pricing in a 70% possibility of that first rate cut in June. And I think, obviously the world follows the Fed. So the fact that the Fed is now sort of, they've indicated that they could possibly take a little bit longer before they start cutting and will remain data dependent, as they've always indicated. That's obviously put pressure a little bit on the local Reserve Bank as well. I think the Reserve Bank governor has always been very, very adamant that, he wants to see inflation locally retreat to 4.5% on a sustainable basis before they'll consider starting to cut rates. And obviously, we saw last week's inflation print coming out quite a bit higher than expected at 5.6%. So that's not boding well for anything. We're obviously not at a point now where I think they'll start even to consider to hike rates, but obviously it's pushing out the first rate cut on the local side, and I think pretty much all economists polled is calling for a hold in rates on Wednesday.
Yeah, all right. We're looking forward to what the governor has to say, and of course we will be getting more insight on inflation as we do get the producer inflation for February that is coming out on Thursday. Let's go into company news that came out of the JSE, starting off with MTN. They released their results today. You did see growth in some line items like service revenue, also increase in subscribers, but what really stood out is the more than 70% plunge in headline earnings per share. Of course, we've all been going on about, MTN's woes with the Naira in Nigeria. What can you say about those results? Quite interesting also that the markets didn't actually punish MTN. I did see that share price up almost 2%.
Yeah, no, I think, it's sort of the market was almost expecting worse. I mean, we are down pretty much 40% from the highs we hit during the middle part of last year before we had the new regulations in Nigeria. But yeah, I mean, Nigeria is the gift that keeps on taking away. I mean, there's just so many companies that have burnt their fingers in Nigeria, and obviously it has a lot to do with their forex regulation and the rules and the devaluation of the naira. I mean, it's been devalued like something about 97% or something. It's absolutely crazy, So yeah, so despite that, we've got high inflation. It's obviously weighing on consumers. Costs are increasing. So all of those aren't very positive for them. But they've increased subscribers across all of their markets. There's obviously still a very high demand for data. The fintech services numbers on active data subscribers grew very nicely. So I think, there's a lot going for it. But I mean, just the general macro environment and obviously their reliance on Nigeria is going to remain a problem for them, I think, for quite some time.
Yeah. We'll talk about companies that have a lot going for them. Private education providers, Advotech, and this one is diversified. So they posted double-digit growth in all their metrics from the top to the bottom line. What do you make of this report card?
Yeah, nice one. The market also liked it. It wasn't up double digits, but it's in the green, so it's a good one. But I think private education in general has been a very strong one in South Africa. Obviously, because of the fact that the sector is so concentrated, there's not a lot of ways you can really get exposure to it. But just coming back to their results specifically, quite impressive. Nice dividend they declared. Revenue was up pretty much across the board. What's also interesting is the South African Schools division, which has done well. And I think, just in general, because it's so easy nowadays, with online tuition, and them actually giving prospective students the opportunity to study online as opposed to going to a very expensive tertiary institution. I think it puts them in a very, very nice position in general. So like this one, looking good.
What else do you like? Your stock pick for today?
My stock pick for today, I've been hammering on this one for a while, and I still think, emerging markets in general are showing, very, very good entry valuations over here. If you just look at sort of the index as a whole, yes, it is dominated to a large extent by China and India, which are obviously at the polar opposites at the moment. India is trading at very high levels. China has been under a lot of pressure. But, I just think on these valuations, you've got to go EM. If you just look a little bit more in depth on, what sort of the makeup or the composition of the index is, you're getting great companies like Taiwan Semiconductors. Those are all ways of accessing the semiconductor, the chips index without necessarily paying eye-watering valuations like for NVIDIA. There's a lot of financial services in there, and you just get a good diversified exposure. So I think any investor portfolio would benefit from having exposure to them. So mine is the iShares Global Emerging Markets Index.
Yeah, all right. Well, thank you so much for your time and giving us insights on what has moved investors' money today, Jacobus. That was Jacobus Brink from SFO Investments.